right, guys, we gotta start really quickly, so I'm just gonna skip a lot of stuff here. We got about 7 minutes and a couple of things to go through as well. So I'll start with a disclaimer. Welcome to our inflation session tonight. I know there's some tech difficulties. We're starting a little bit late. Just a quick disclaimer, any opinion discussed in this webinar or link to this presentation is provided as a general market commentary and does not constitute investment advice. News trading involves risk due to high volatility. Market reaction to news can be very swift and unpredictable, which leads to high trading risk and delays in order execution. So be very attentive when determining the volume of transactions. Consider all possible risk factors. All right, so we were just talking about it. This is the code if you need it. It's not from 2025, and I just want to show you the calendar right now. I'll break down a few things. If we take a look at what's going on in the market here, the inflation rate that we're looking at, I think the market is actually pricing in for 2.7%. So that's what I'm thinking right now, right? If we get 2.8%, I think that's already been priced into the market anyway. I wouldn't be too surprised on that one there. So yeah, as I said on the chat, and I try to briefly explain this very quickly to you guys, it might be a little bit weird, but we might actually get a negative for the US dollar if the inflation goes up, which is not supposed to happen, right? Typically, if inflation goes up, the US dollar should actually strengthen with it because the 10-year yield would go up, then the FOMC would start making a decision not to cut interest rates, okay? So the worst case scenario is, this one here is a little bit unpredictable, is if we get a number that's actually closer to 3%. So a number that's actually closer to 3%, I would assume that would actually cause the market to kind of melt down a little bit. And the concern here is that for the US economy to kind of destabilize, this would actually take money out of the US economy. That would mean a lot of investors pulling out from the US economy. We might actually get a stock market crash if that happens, because that would actually put the FOMC in a very difficult situation because the labor market is already constricting. The labor market is not doing that great. And if the inflation goes up, it's actually the worst case possible for the FOMC, because on one side, they're not able to cut interest rate as inflation goes up. At the same time, they need to cut interest rates because the labor market, it's really bad. So I would assume Trump would start, acting a little bit weird. He has been acting a little bit weird in the past 3-4 days. If you guys have been following what he's been doing, especially with Intel, Nvidia, and tariff on gold, right? But yeah, that is actually the worst case scenario. Now, if we get an inflation rate that is actually lower, we might also get a weaker US dollar. We might, but that's not a guaranteed kind of thing. Again, the concern here is that we might get an influx into the equity market, then the US dollar is going to be bought. Okay, so this is a little bit problematic on that front there. But yeah, the number that we're expecting, 2.8, that's a consensus. We might get 2.8, we might get 2.9. I'm thinking 2.8 above for tonight. Core inflation, we're looking at 3%. If we overshoot above 3%, then yeah, again, that would be the scenario that we're kind of looking at. All right, just jumping very quickly here on the Euro USD. Market's been pulling back a little bit. I know this range seems to be huge. It's actually not. So we can actually start placing our positions here. It's not much. Buy stop, we're going to be placing it at 1.1630. In terms of the sell stop, this is actually going to be a little bit lower. We're going to place it about 1.1590. So yeah, this is the range. It's about 35 pips on the euro. On the sterling here, I would be a little bit more cautious here. If it does break to the upside, then yeah, sure, we can go for that one there. We were talking about 1.3475. I do want to place it at least above 1.3480. And to the downside, smaller range here. We do want to place a sell stop a little bit lower at 1.3440. You want it a little bit safer, you need to place it at 1.3394. I think that's a little bit too far down. So I'm happy about 1.3440. And on the flip side, to the upside, at least 1.3480. All right. We got about 2 minutes here. Dollar Japanese yen, please do not touch dollar Japanese yen on this one here. for all consideration's sake, we can place a sell stop below 148 if you want to. We might get a very quick trade on this one here, but this shouldn't be a swing trade on the dollar Japanese yen. To the upside, I don't really like placing a buy stop on the dollar Japanese yen, because if we take a look at the movement here, we technically are not able to straddle this. If you really do want to straddle this, the only concern I have here, if we start buying the dollar Japanese yen, is actually very close to a cluster area here on the dollar Japanese yen. All right, Aussie USD is an instant skip, New Zealand USD is an instant skip, dollar CAD, dollar Swiss, all an instant skip. So we've got Euro USD and whatnot. Gold also, we'll wait for the data to be released before we trade on gold. Okay. So hopefully audio is coming through okay. That is actually going to be released. Oh, we got about 40 minutes, 40 seconds, 40 minutes. But yeah. This is what I have planned for now. I think this is, those are going to be the only currencies that we can actually straddle, which is the euro and the sterling and the dollar yen. I'm happy to go sell stop on below 148, but looking for a buy stop above 148.60. I think that's a little bit too much at this point in time, because we're looking back, we are looking at a little bit of a cluster area there in terms of potential resistances on the dollar Japanese yen. So we'll wait and we'll see what happens here. Numbers should be coming through about now. All right, there we go. All right, sterling shot up. We got triggered here, so I need to close out my sterling trade here. Euro USD has also been triggered. Dollar yen has also been triggered. Pretty much, pretty much one directional. Just waiting for data to load up. All right, be a little bit more cautious on these numbers here. Inflation rate at 2.7%. This is as per expected. I believe core, where's the data? Okay, we got higher on core inflation. We got 3.1%. So we're getting a little bit of an overshoot here. So this is actually a little bit of a mix in terms of the kind of the expectation that we have. Monthly rate, it is at 0.2%. That's per consensus. Core is at 0.3%. This is as per consensus. I think the one that overshoots its core inflation rate at 3.1%. But yeah, inflation rate is at 2.7%. Trump should be posting on Truth Social any minute now, probably in the next 5 minutes or so. The core year-on-year increases at 3.1%. The others are as expected. Again, I'm still looking at that scenario where we're potentially looking at a weaker US dollar here. So I think this is per plan. Sterling, euro, and dollar yen, I think this is triggering in the right direction here. We'll just wait and see what happens here. We might cut it off if it doesn't go in our direction in the next 2 minutes or so. But yeah, initial reactions that we're looking at, most definitely a potential for a weaker US dollar at this point in time. The core is not good. And again, if you guys are thinking which one is the focus for the FOMC, is definitely the core inflation number. The core inflation number would be the underlying inflation for the United States. It actually went up 3.1%. And this is for July's number, right? If we consider tariff kicking in officially in August, basically last week, we should get a higher number in August in terms of the inflation number, but we'll see what happens here. I'm just gonna wait a little bit here. We are about 2 minutes in. I'll give it until about 35. We'll see what happens here. Not looking at a lot of price movement in all honesty with you guys here. I mean, if we go into the 5 minute time frame, you'll see that spike there. But generally, if we take a look at the spike there, it's still really pushing to the upside. Initial first minutes there, still push to the upside on the euro here. Same thing on the sterling here. I think we might actually be looking at the potential scenario where, yields could go up, but the US dollar could actually go down with the bond markets here. I think it's just a lot of concern that we have here. All right, dollar yen just triggered the short, but it's just pushing back up, not going anywhere. I think we bounces off 148 very cleanly on this one here. Again, it might look like a lot to you there. It's not. if we sum it up, it's only about combine all three trades. It's negative 10 pips, 4 pips each, 40 pips each. Yeah, 10 pips. Yeah, about there for all combined trades. I'm not seeing that push down, so I would be a little bit more careful here. Would definitely not want to fade this. Let's take a look at gold very quickly here. Again, I'm looking at non-reaction on gold here. I want to take a look at the equity market. Equity market is pushing up right now on the US as well as the Nasdaq, so we'll see what happens here. But again, does point to a weaker US dollar. If we take a look at the situation here, I think market is kind of divided. Should they look at the 2.7 unchanged inflation or whatnot? Because if it's unchanged, so Trump can play it one way. But he'll look at the number and say, "Hey, Mr. Too Late, it's 2.7%. There's no inflation." It'll probably tweet, should be posting right about now. But yeah, you'll probably see that on the headlines soon enough. But we're looking at a non-reaction in the market here. I might actually get out of the position here in about 30 seconds if nothing's going on. Gold could push to 33.61. Looking at it, a little bit conflicted there. I mean, it's not on the early time frame here, but we'll see. We're 5 minutes in. We'll see what happens here. I'm not looking at a lot of reactions here. So let's jump in very quickly and see what's going on. Again, my view is we're potentially looking for, risk appetite to come back into the market at this point in time. If the early readings are people thinking that the inflation is stable at 2.7%, and if Trump feels it, then yeah. I think we might actually see risk appetite coming back into the market until everyone probably realizes that in about an hour's time or so that, the core actually went up. Might make the FOMC, it's harder for the FOMC to do anything about it. All right, gold, can it push to 33.60? We're currently looking at a pivot there right now for gold on the daily pivot at about 33.62. I'm just not looking at the strength, in all honesty with you guys. Because right now, if it does push higher, it should be able to push higher. I think gold loses a lot of its strength there from last week because I think the US Custom was saying that there's going to be tariff on gold from Switzerland, and that would be at a rate about 45%. And then Trump says that last night that, there's not going to be any tariff for gold, because if that happens, then, I can't bring my gold back to the US. Look, it's just a very common sense way of thinking. It doesn't benefit Trump in any ways. So yeah, look, he's being really weird at this point in time. Asking Intel's CEO to resign last week, and then Intel comes meet him and say, "Oh, he's a very amazing person, successful person, blah blah blah," and then asking 20% from Huang. That's super weird for a president to do that. All right, we're not going anywhere right now in this range. I don't feel comfortable with holding on to the trades that we have right now. So we're actually putting out on the trades here. If you guys want to stay, I mean, it's fine. Look, we're just not out of that range, right? We're not breaking any lower. So technically you can stay in that if you want to, but we're also not going any higher at this point in time. The dollar yen, this one here is a little bit of a concern. I think this would actually be the one that I need to cut off. The euro USD and the sterling, I'm not really too concerned, but the dollar yen, this one here is dragging these positions a little bit. Partly because of the euro yen and sterling yen probably strengthening with it. So let's take a look at the euro yen. Euro yen is pretty stable. Sterling yen. Do I not have sterling yen? No, I do have sterling yen. All right, sterling yen is also pretty stable. I'm not looking at a lot of reactions on the Japanese yen here. Equity is not open yet, but if we take a look at the futures, we would get that reaction on the futures here. But yeah, things could change exactly when the equity market kicks off. As I said, I would get out from my positions right now. This is just not comfortable at all. So we'll stop there, and we'll try to figure out what's going on here. I'm not looking at a lot of range movement here. Definitely not on gold. Not looking at anything on gold here. Euro USD, I'm also still getting, shorter time frame still indicating for push to the upside here. I'm not looking at any potential for a fade on the Euro USD, sterling. Yeah, At this point in time, even on the shorter time frame, we're just looking at a little bit of a pullback happening here, but the nothing has shifted as of yet, from what I can see. But I mean, if you're in for that news trade, we should be out. I'm not too comfortable holding the position like this. All right, just a disclaimer here with the Nasdaq and the US 30. Right now, it's pushing higher because the logic here is that some people might actually look at that 2.7% and say, hey, inflation is actually stable, it's not going up. I'm just checking if Trump has already posted stuff here. Yeah, I'm not actually able to access True Social. It's really hard to access True Social outside of the US. Nothing. It hasn't posted anything yet. So we'll see. All right, Nasdaq's pushing up higher, at least on the short term, but when the equity market kicks off and everyone starts figuring out that core inflation is actually at 3.1%, remember, this is the futures pricing in stuff. It's not really the real market that's opening up. We'll see what happens here. We might get people thinking 2.7% and say, hey, it's good. The FOMC is going to be starting to cut rates because inflation is stable. At the very least, it's stable. It's not really up or anything like that. But yeah, as I say, the core is up. With the US 30 is also pushing up higher here. But yeah, everything else is up. The Euro USD and the Sterling is up right now. So if you guys didn't close the position, I was out because I'm not too comfortable with that. I think you guys can stick to that. I think by now you should be able to start moving your stop losses. Reason why I'm not too comfortable with the Euro USD and the Sterling is, even though it pushes up higher, let me just bring this out on a small time frame. Even though it pushes up higher here, all right, we had our buy stop at 1.1630. The movement so far, we are about 10 minutes in. It didn't actually manage to push beyond 20 pips. On the Euro USD, it's not a lot because this is currently still smaller than the range that we have before the trade, right? This is the range that we have before the trade. And if we take a look at what happens here, we're not really off anywhere, right? It might get cut off at about 1.1660. And even then, if we measure it, we're looking at about 35-40 pips of range there, and from that 30 level up there, it's only about 33. We're just not getting enough speed to lift it up. So if you guys are in profit right now, I would consider maybe just getting out of position. If you want to hold it, feel free to move your stop losses to break even or at least minimize your stop losses. Sterling right now is at 1.1350. You need to be a little bit more careful around this area here, about 1.1350 on the Sterling. This one here is now very close to the daily R2. So just, 1.35. 1.35, which is a psychological price level, right? So yeah, if you take the trades just now, you should be in the money right now, but I choose to get out because it's a little bit unclear. We're not really pushing below 148 on the dollar Japanese yen. So let's take a look at gold. I think someone was saying it might actually go up to 3,360. Again, if you take a look at gold's price movement, unlike the currencies which is really pushing up higher, gold it's not really gaining anything. I would be very mindful. We might not even get there. Even if we do get there, the stop losses on this one here is at about 20 bucks. What's the potential gain for this one here? About 10, 12 bucks. Risk reward ratio just doesn't click in anyway. They're gonna realize that with the core that the FOMC is not gonna cut, and yeah, I would see that. Now, one thing I'm more concerned about is definitely the yields. This is really weird. Right, yields is actually coming down really quickly. So I think market is starting to price in. They were looking at that 2.7% unchanged. Yield got smashed. Dollar got smashed. then, in about 45 minutes time, things can just flip. So I would say in the next 1 hour, things could flip. So just be cautious, okay? Because everyone's just going to start figuring out that the core it's actually a little bit, it's way too high. It's higher than 3%, which is beyond the limits of the target range that they have, right? 2-year yield is down, 10-year yield is down. So far, pretty much everything is in line. Dollar index is down. Yeah, but let's take a look at on the daily scale. Positioning on the sterling here is that, yeah, we are approaching that area that we talk about on the outlook. We're now approaching that 1.35 level, which is 78.6%. Also Ichimoku Cloud, also where the R1 is located. So I would be very cautious if you're still holding on to that sterling there. Even to swing it, I don't think we have enough confirmation or anything. The Euro USD just bounces off the weekly pivot inside the Ichimoku Cloud. Again, as per my outlook, we were looking at this trend line potentially capping further progress on the Euro USD. Dollar Japanese yen, this is still way off, but you take a look at where it's actually being blocked off. That was basically being blocked off by a little bit of a potential resistance there, which is from the month of May. Okay. CME actually increases probability of cut from 86 to 91 for August, for September, because for September, because we don't have anything right now. Today, let me check CME. All right, CME FedWatch. Things are a little bit slow on my side for current target rate, 90.1. 1 day ago was 85.9. So yeah, if you guys are wondering what we're talking about, we're talking about this. You guys want to check it out. It's called the CME FedWatch tools. Just Google it up. First link should be there. So this has been adjusted. Wilvin, thanks for pointing out. 1 day ago, it was at 85.9. It was 90.1. However, compared to a week ago, it was 92.9. So, probability-wise, I think it's kind of shifted a little bit. A month ago, we were looking at 57.4, but that was for July. That was for July. A week ago, it was at 92.9, and it dropped to 85.9. It's now back at 90.1. That, I don't know. This is just not convincing enough. Yeah, look, in all honesty, September cut. Take a look at October cut here. October cut has also gone up 65.1. Yeah, the current rate is at 2.6%. December cut, has it been priced in? I think market is starting to price in for 3 cuts. I really don't think that it's actually going to be 3 cuts. We'll be lucky enough to get 1 cut here. But yeah. Okay. So as I said, you guys want to get out, you should be getting out. I'm not getting a lot of progress here on the Euro USD. We're not really pushing higher here. I would consider this a non-reaction. This is really struggling to push any higher at this point in time. 5 minutes is about to close. If 5 minutes closes any lower than the candle from 10 minutes ago, it might actually be looking at a little bit of an evening star on the Euro USD on the 5 minutes. On the sterling, it would actually be just about the same thing. This doesn't even take long. We just need price to get rejected at 1.35. You might see a little bit of a liquidity grab happening at 1.35 happening here. Price didn't push 10 pips beyond 1.35, so definitely looks like a liquidity grab to me. Yeah, look, I highly doubt a three cut. I think there's actually a higher probability that JP got fired first before that 3 cuts happened at the end of this year. That's my view on that. Trump has been losing his hair since I don't know. All right, guys, anything you guys want to request? I actually don't have a lot. We are not looking at a lot of volatility happening in the market. If you guys are, if you guys still have that positions, and you should be at about break even right now. If you're not sure, and I'll tell you right now, I'm not too confident with the current run here. Yeah, I'm just not too confident with the current run. We're just not looking at enough lift happening, because, you know, if we talk about risk appetite coming back into the market, if the market really thinks that it's 2.7%, then yeah, by all means, it should be running up really quickly. We should be looking at a run that's at least, 40, 50, 60, 70 pips happening by now. We barely managed to push 20 pips on the sterling and on the euro. So, I'm not liking it at all. Okay. Dollar yen, if we take a look at the positioning here, we're just kind of stuck there about 148. If we didn't cut off 148 in about 10 minutes time, it'll get really, really dangerous. So if you're profitable, please get out from your position. Again, this is really news trading. I don't think you should be position trading at this point in time. We don't know what is what. At this point in time, we don't know what the reaction is. We don't have any comments from Trump as of yet. Okay, that's my standpoint on the whole thing here. So if this is about to lift off, it should be breaking 1.1650 on the euro, and for the sterling, it should clear off 1.35 in the next 10 minutes. If it doesn't do that, it's problematic. That's I would say. If you're still holding on to the dollar Japanese yen, I'm completely fine with that. So let me break down the dollar Japanese yen. Reason why I'm completely fine with the dollar Japanese yen, we got rejected at R1. The RSI and the stochastics on the daily is actually pointing to the downside here. Is actually rather neutral. Now, if this one goes down, where is it going to go? Well, I would say maybe about the pivot level about 147.50. But this pivot level was actually tested yesterday. So again, something that I would actually be cautious about, right? And look, there's a lot of stuff here. Let me just clear it off. Okay, we're hitting a reason why daily pivot is at 147.90. We hit that. We're bouncing off that level there. We're technically still above the Ichimoku cloud. So even if it does go short, I really doubt it will actually hit any lower than 147.50 because that's where the Ichimoku cloud is going to be located. Now, if we take a look at the overall structure here on the dollar Japanese yen, at least on the early time frame, we're really looking at this creating a higher low and a higher high, right? At least on the early time frame. And the support trend line here, if we consider the potential bounce happening here, this would actually be a confirmed support trend line on the dollar Japanese yen on the early time frame if it closes like so. So if it doesn't clear 148 in this hour, I would be extremely cautious. As simple as that. Okay, if you want to hold on to your positions, make sure you have a stop loss, and that stop loss shouldn't be exceeding 148.50. 148.60 is kind of the max in terms of the stop loss I would place on the dollar Japanese yen, but you're risking a bit too much here, because if you take a look at the current structure that we have here, at least on the early time frame low, technically it still points to the upside for now. All right, even on the 50 minutes here, we just managed to get a little bit of a break here. I think there's a little bit of a minor change of character happening here. And this one here, but not really much of a confirmation as of yet, because we need to clear off below that daily pivot. Otherwise, we're not going to go anywhere here on the dollar Japanese yen. All right, so just be a little bit more on the cautious side on this one with this one here. Okay, I don't know what the market reaction is, but I think the market reaction is when the equity market opens, is that they're going to start talking about that core CPI number at 3.1%. Okay, and things might change. Everyone might say, you know what? If FOMC is going to base it off the core CPI, then it's not possible to cut interest rates. It's already exceeding the target range of 2 to 3% that the FOMC has. Okay, well, it really depends. We're just looking at orange, whether or not he's actually going to step in and start commenting on the whole situation here. I think that would actually move the market here. We already talked about Nasdaq 100. What are you talking about? Bitcoin has no relation to this. In all honesty, yeah, just so you guys know, I mean, Faisal would probably be new here. You guys probably don't know me, but I don't really look at cryptos. But if you take a look at Bitcoin here, it's not really pushing above 120, right? I know this was hyped up yesterday and stuff like that. I think it was a little bit of a run higher here on crypto. But look at the movement there. You know, it does seem very clearly that it's basically more of a liquidity grab. Considering the wicks that we have there, it's basically about the same size, right? It didn't even manage to hit that high in July, and price basically didn't actually close above 120,000 on Bitcoin. So my view on this, wouldn't be buying. As simple as that. And if you take a look at the hourly time frame, I think this one here just transitioned a little bit lower on Bitcoin. So we'll see. We'll see what happens. But I really doubt it will actually push and hold above 120,000. If the equity market is positive, then yeah, it might actually hold, because this is more of a, you know, a risk sentiment thing right now. I think this is more of a risk assets rather than anything else. Any reason I don't look at crypto? I don't mind doing it for fun, right? But for me to invest in something, I need to be able to trust it. And major coins, I'm okay with that. But at the end of the day, there's too much punters out there, if you get what I mean, right? There's a lot of people that don't know what it is, and they just started trading it because everyone thought, hey, you know, they heard stories about people making money out of cryptos and stuff, and whatnot. So again, my view on this one, the reason why I don't actually day trade cryptos, I don't see the fundamental support behind cryptos, right? So crypto bros out there might probably look at this and say, hey, he doesn't understand shit about it, right? Sorry, I said the S word, but you know, what's really backing it? I don't know what it is, right? We can take a look at the white paper, we can take a look at the technologies behind it, that's completely fine. So if I were to invest it for fun, I would do it, right? But if I'm here to trade it as a living, I don't do that. You can call me old-fashioned if you want to, but I'm just not there yet in terms of how this can actually be utilized as a currency or as an investment. That's the way I look at it. Okay, so if you guys want to know my logic behind it. Okay? All right. Last minute questions. Any questions you guys have? But yeah, I think my stance on this one here, on the three trades that we have, the Euro USD, I would definitely want to get out of it. I don't see any reason holding on to it. You can see that push happening here in the last 5 minutes right now, 10 minutes, it's pulling back. Market is about to close on the hourly, and you can see that rejection happening right now. Similar situation with the dollar yen. This is actually bouncing off that 148 level. So again, and that's one of the main reasons why I said, you know, I'm not comfortable. I would just get out, right? If you guys managed to get it when it was profitable, good, get out. As I say, I just don't see the point holding on to the positions that we have here. We already take a look at gold. There's not a lot of movement on gold. So you know, as a last minute question, we'll take a look at gold here. But gold, you can see the progress on gold here, and we already talked about this on the outlook that I just don't see anything on gold here. You can see the range; it was just basically being capped off up, you know, top and below. Someone just asked just now about this pushing up 3360. I said I kind of doubt it. If it does manage to push above 3360, ignore all the spikes if you don't mind, right? And let me just try and show you with Heiken here. It's actually really flat, right? Probably not going to be able to look at anything. Renko is also still pointing to the downside. Now, the the area that you want to be focusing on is, it's going to be highlighted here. Ignore the spikes. All right, price can actually spike out of it. I haven't seen price close below. I would adjust this a little bit lower. I haven't seen price close below 33.40, and I haven't seen price closes above 33.60. You know, this $20 range, if we didn't break out of this range, that's kind of hopeless. Just put it simply, right? We need to get out of that range, otherwise we're just not going to be looking at anything. This is on the hourly time frame. This is gold. It's been stuck like this since yesterday US session after lunch, and yeah, we're not going anywhere. If you guys are thinking, okay, I'll buy now and I want to go long, I'll target 33.60, as someone said, you know, they want to be looking at a potential for 33.60. I say, yeah, it makes sense. I mean, pivot is up there. But if you do that, your risk reward ratio is basically about 1-to-1 right now. If you do that, right, if you do that just now during the news release, your risk reward ratio is 2-to-1. It just doesn't click. We're not going to go anywhere. So my opinion on gold, I would just step aside. I don't think there's actually anything to trade on gold. Simple as that. Gotta see if that dollar yen support level still holds. If it does, that would make a good long. I would say, yeah, I'm okay with that for dollar yen, because the dollar yen, in terms of the support wise, this is actually this yellow area here. It is actually a little bit lower. It's at 147, right? So yeah, hourly 148. If it holds, then yeah, by all means, I think it would actually be a good area to kind of go long, because this support trend line would actually be a new trend line that is going to carry the dollar Japanese yen for quite a while, right? Because we just transitioned above the Ichimoku cloud from last Friday. This one is pushing higher. Hourly just confirm. We just confirm it. We basically had a third bounce on that one there. So we'll see what happens. We'll see what happens if 148 price, as long as price doesn't go any lower than 147.50, it should be fine. If you're thinking, okay, if it might go down to 147.50, maybe, you know, a long buy limit at 147.50 probably makes a lot more sense, because your stop loss is going to be about 147.30, 147.25, and you can target you know, the high just now, or maybe even higher, 149 if you want to. I think that it does make a lot more sense. But yeah, it should give you a really good risk reward ratio. We're looking at about 1.314 RR. Dollar yen didn't actually breaks a box to the downside, but you know, if we take a look at it on the hourly scale, it doesn't actually break the channel that we have here. If you guys are not looking at it, this is the current progression that we have on dollar yen. So price I can actually potentially bounce and trade inside this channel here. It might actually go up. So we'll see. The 5 days box on this one here. Oh, the one here, the one we talk about on the outlook, this area here, yeah, it did clear it off. So I think that's actually a little bit more bullishness on the whole thing. So yeah, but again, we were short just now during news releases. We were long euro, we were long sterling. If you managed to get in and get out, great. I think that would be great. If you had stick onto your trade right now, this is kind of stuck, right? And again, news trade, 30 minutes in, you know, first 10 minutes, I'm already closing out the positions. I'm not too comfortable with what we have. All right. That's pretty much it. All right, this is the code. It's non-farm 2025. Feel free to use the code. It is expiring on the 31st of December 2025. And look, we do apologize. I think there was a little bit of a technical issues there in terms of the connection there, in terms of getting the team to connect my stream there. So we started late, but we started in time to actually look at the release of the numbers itself, all right? So let's wrap it up for the month of August, at least for me, on this English session here on the Octa broker side. YouTube channel. You guys in Indonesia probably still have more sessions with me for the rest of the month. But yeah, for the English sessions for me, that will be it for the month of August. I'll see you guys again in September. And, thanks for joining in. Really appreciate it. And thanks for all the questions there. So hopefully you guys managed to navigate through the month of August safely. And I'll see you again in September when we have our non-farm payroll.